Despite all the hype about Vancouver real estate high prices, it might surprise you to learn that the condo market has in fact been flat, if not dropping in value in some areas. And with worldwide economic worries, some potential first-time buyers have been reluctant to take the plunge. Well, enter the 2.99% 5-year fixed mortgage from the Bank of Montreal.
In the current environment, with the degree of uncertainty, it's really a terrific opportunity for customers to lock in at this great low rate and to have the confidence that their rate is not going to rise for 5 years.
Most baby boomers can remember the lofty rates of yesteryear, how in the 70s the 5-year mortgage rates bounced around the 10% range, then shot up dramatically in the 80s, peaking at more than 21%. But ever since then, save for a few spikes here and there, that rate has been on a steady decline. In fact, the 5-year mortgage has been below 10% for 20-plus years and is now in uncharted territory, the lowest in history.
I think the Bank of Montreal is looking for short-term promotion or to maybe capture increased market share. We're yet to see whether other banks are going to follow suit, but perhaps not given the short duration of this particular program. Rates today are incredibly low. We're at probably the tail end of a 25-year decline in longer-term mortgage rates. And discounts today from that posted rate in most banks, you can get quite a deep discount if you have good credit ratings.
This is obviously a two-story.
Okay. The first concern that jumps to mind is that record low long-term rates could lure Canadians into taking on more debt than they perhaps should.
Gives us the opportunity to look at some things that might have been out of reach for us, and now we have that opportunity, and we're going to take it.
That's not likely the case in the Lower Mainland, where housing prices are so high already. A small decrease in long-term rates are expected to have almost no impact, not even for speculators.
Interest rates have been low now for a number of years, at or near historic lows, but mortgage rates and short-term rates as well, and that hasn't driven any kind of speculative theory in the marketplace. In fact, when we look at sales activity, we're only trending at or probably below the 10-year average in terms of overall unit sales. So it's really nothing to write home about in terms of an overheated market as a result of low interest rates.
So if you couldn't afford this house a month ago, you still can't. But at least now you know that low long-term rates are here to stay, and that should make first-time buyers at least a little less hesitant to take the plunge.